Sorry, DJ.
I knew I'd lose it. It's all right. Thank you guys for joining the Realty One Stop Mastermind. Tonight, we're going to talk about just some general market updates and have a group discussion. And the prompt for tonight was any challenges you're having in your investment businesses. And hopefully we can kind of work through those or any other lessons learned recently. So I appreciate y'all taking the time to join us. And thank you to Eric for being here as well. I'm definitely interested in hearing what he's seen down in the Florida market that he has recently started his agent business in Florida as well.
Glad to join. Glad I was able to finally make it back on.
Yeah. Actually, why don't we kick off with that if you don't mind? You want to go first? Tell us what you're seeing in Florida and how things are going with your new venture.
Yeah, so we've been licensed down here for 14 months. So we've been tracking the market since we got licensed. Just moved down here at the end of May, like beginning of June. So pretty much working in it every single day. It's a lot different than Cincinnati. For example, in Cincinnati, I think the last time we checked, we're at 15 or 1,600 active listings. In the Tampa area, which is 5 counties, we're at 14,000 listings. So it's a lot larger of a market. It's also a larger population, but biggest difference in between the two is like Cincinnati, our average day on market is still 1 or 2 days. And down here, our average days on market is 52. So wow. Started to slow down quite a bit. Price points are dropping a little bit, not a ton. And the average price point in the Tampa area is $473. So a little bit higher of a start point. So I think those interest rates kind of going up and down have a pretty big effect on it. It's also a transient state. So it's pretty normal for when the economy is doing really well. Florida is a boom state. And then when the economy starts to shrink or the GDP starts to pull back, a lot of people move back to where they came from. So I think we're starting to see a lot of that right now. And if you're listing in like a hot area, so if you're still in like a really desirable neighborhood, it's not crazy for the property to be gone with multiple offers within the first week. But I'd say it's very common to come down here and see properties sitting 2 or 3 months.
Wow. So,
yeah.
And you may not know this off the top of your head, but if you do, I'm interested. Proportionally there, when you talk about, I'm assuming you're including your whole MLS down there. Is that what you're referring to when you say the 5 counties?
So the MLS down here, the Tampa MLS is the 3rd largest MLS in the United States.
Okay.
So if you include the entire MLS, it's pretty much all of Florida and Puerto Rico, and then some just random other counties.
Wow.
Yeah.
Okay.
So like if I did our entire MLS, I'd have to say our active listings are probably like, I think the last I checked, like 60,000.
Oh. Wow.
So it's strictly just Tampa.
Okay.
In terms of that 14,000 number, and we've noticed it growing. So when we first started, we first started doing it every week, probably December this past year, and we started out at like 7,000 listings. So we've almost doubled on active listings down here.
Now, when you so you're talking about the population density versus Cincinnati area, and do you have any idea proportionally, listings per capita or anything like that? I know that's probably a weird metric you may not have looked at, but just if you had a ballpark number.
It is. So if you're looking at like Cincinnati as like a metro, I think we're just shy or just a little bit over like 1 million. Like if you're considering like all of the counties that consist of, like, if you're outside of just Hamilton County.
Yeah.
If you do the same in Tampa, like, which your main county is Hillsborough, but we do like 5 counties, goes all the way down to Sarasota, and then about 30 minutes north of Tampa. Our population is like 3.5 million. So it is about 3 times the amount. But if you're just using ratios, like, we should be at about 6,000 listings if we were compared to Cincinnati. Our average months are our average. I don't know why I can't think of it right now. It's slipping my mind. Our inventory supply, like Cincinnati, we're still less than a month of supply. Down here, we're edging towards 3 months. So it's starting to go more towards a balanced market down here.
Okay. Gotcha. So it sounds like what you're saying is per capita, there's about 3 times more inventory in your market in Florida versus Cincinnati.
Yeah, it's a little bit like, I'd say it's kind of double.
Double.
Um,
Okay.
yeah, so it's about double. This is also like our slow season. So like Cincinnati, the slow season is in the winter, and
Hmm.
Florida, the slow season is in the summer because it's so hot. And
Yeah.
most people are snowbirds. So a lot of people come down here during the winter and then they go back to their house back in the summer. So it's not uncommon for the summer to be pretty slow up here. Um, but again, I think it's more of just like the fact that anytime the economy starts to shrink, Florida becomes less desirable. It's kind of hot out. Average price point's a little high. And then there's some other factors, like if you include the fact that a lot of insurance agencies are pulling out of Florida, making it tougher to get financing. And then if they're not pulling out, they're raising their rates by quite a bit.
Just from the recent hurricane issues and flooding.
Yeah, and that tends to happen. I actually lived down here in 2004 when Charlie was a Category 4, hit Fort Myers. And when it hit, all of the insurance rate went like sky high because the insurance companies have to make their money back. And then once you go like 5 to 10 years in between like a major storm, those rates start to drop. And then you get hit by another storm and they go sky high again. So it's kind of cyclical in a way.
Gotcha. And now in your business in Florida, are you doing predominantly residential type, like retail type? Are you doing vacation housing? Like what is your business focus, or what are you seeing the most of?
We're doing a lot of residential and we're also working with quite a bit of investors down here.
Okay.
Um, the I will say that compared to Cincinnati, because we did a lot of that up there, the meat on the bones on the deals down here are absurd. Um, so a lot of people won't flip a house down here unless your profit's going to be about 100K a deal. Um, and it's more of just because your average price point is a lot higher. So that's kind of been nice. Like when we're looking at deals and we're on a bunch of like, wholesalers lists and everything like that. Up in Cincinnati, we'd get stuff where like, I mean, this is literally almost ARV what they're shopping it for. Down here, you're like, okay, there's like, I have room to do 100,000 rehab on this property and still you're way above.
I think we lost you for a second.
Oh no. Here,
Okay.
let me get off the Wi-Fi. There we go.
Okay, I can hear you now. Okay, so last thing I heard was 100,000 rehab, and you still have.
You still have meat on the bones. Like there's just like every deal that kind of gets shopped down here, they tend to be now the other factor is you're holding on to the property for a little bit longer. So I guess the positive with Cincinnati is if you list something, if you've priced it well and you do a good rehab, it's gone in no more than a couple of days. Down here, you're sitting on it for a couple of months. So you have some hard money factors in there, but the deals for the most part have a wider spread.
Cool. And then I think my last question is, when you talk about rehabs, what are you seeing on the construction side? How is that related to Cincinnati? Is there a shortage of contractors, laborers? What issues or non-issues are you seeing in your market?
I would say like the biggest difference, there's a lot of contractors. Finding good contractors like anywhere, it can be tough. So you have to try and find one and hang on as long as you can. The biggest difference in between rehab down here versus up in Cincinnati is most people that do rehabs down here, you're putting a 50-year roof on the house. You're doing hurricane force windows and exterior doors. None of the construction here built in the last 20 years, nothing's wood frame. It's all CBS, so it's all cinder block built. So there's sturdier homes. You're not going to run into termite issues as often. And there's no basements, which is nice. So almost no foundation issues. And I guess like if you want to throw in some weird stuff that we see down here, you have to like keep an eye out for like sinkholes and flood zones. So those are two things that are more common than you'd probably think.
Yeah, that's interesting. So I mean, would you say on average you're paying more on a rehab, like let's say an apples to apples you can get to Cincinnati? Are you paying more or less, you think, for labor there?
Labor is probably about the same, but I'd say rehab just for your materials is probably going to be more expensive.
Okay.
Material costs are a lot more expensive down here. I actually know of a contractor down here, and like the majority of his business, he goes up north and buys materials and then drives it down and then upcharges it and makes money in between because of how expensive material is down here.
Gotcha.
So
Awesome. That's awesome, man. Yeah. Anything else you want to add?
no, STRs are still like really good. I mean, the market in whole is still great. It's just different than Cincinnati. It's interesting to see it kind of in between. Like we still have our team up in Cincinnati doing stuff, and it's stuff's been on for a day, multiple offers, way above ask, and everything like that. Down here, you can offer below ask for closing costs, keep your contingencies in place. So kind of interesting to be in between both markets right now and seeing what's going on.
Yeah. Yeah, that is interesting. I would assume that given what you're seeing in the shift in the market, that's probably opening up opportunities for buyers to, buy out of state rentals or short-term, mid-term rentals. Am I wrong in that
Yeah.
assumption?
No, I mean, the rents down here are absurd. So like, for example, to rent a 2-bed, 2-bath apartment here, you're going to be paying $2,300 a month. So, like we literally the first week we were down here, we wholesaled a townhome to somebody, and they got it for 205. It probably would have appraised in as is condition at 260. If they put 10,000 into it, it'll probably appraise for 280. They got it for 205, and they're going to rent it out for 2,400. So, and the HOA takes care of everything in that townhome, and it was $200 a month. So there's a lot of really good deals down here. The other thing I'd kind of throw in, it's not guaranteed, but a lot of the times, like coastal markets are leading indicators of what ends up happening in the Midwest. The Midwest tends to lag behind. I'm not saying I see this happening to Cincinnati. To me, there's a lot of factors in play that are going to keep it hot for a good time unless something just comes out of nowhere. But something to keep in mind is typically these coastal locations are typically lead indicators for what we see for the housing market throughout.
Yeah, definitely. I remember, even being young when the last major real estate recession happened, it was definitely hit, California, New York, Boston, East and West Coast before we had the same sort of downturns that they saw.
Yeah.
Awesome, man. Well, I appreciate you sharing. I was definitely hoping you could jump on to hear a little bit about what you're seeing in the South, and that's it's pretty interesting dynamic. I mean, I think if anybody else in the group's kind of paying attention to the inflation rates and CPI that came out, I think it was today or yesterday when it came out, but I was reading up on that, and it looked like we're at about 3% overall CPI, and so that's good. It's getting closer to the target rate. But all the assumptions that I'm reading are that the Fed is still going to do a rate hike in July. So we're looking at rates raising another potentially 25 basis points or 25%, or I'm sorry, or a quarter of a point on an interest rate. And
interest rates, if I can jump in for a second, interest rates went down from Monday. My lender was quoting out a 7.2% on just a primary residence. Today, because of that CPI print, it came in at 3. They were expecting 3.1, so it came in about where they expected. Primary residence interest rates dropped to a 6 point, I want to say 4 or 6.5, so almost 0.5% a day. Yeah. So they kind of expected that CPI number to be a little bit hotter than expected. So there's a small chance. I think we're probably leaning towards no Fed hike, because the rates went up last week. They were expecting 3 more Fed hikes, just with the way the economy was going and all of these hot data numbers. But since the CPI came in lower than expected, it kind of beat out the fact that jobs are doing better than expected.
So you're thinking that they may not raise the rates when they meet in July?
There's a small chance, but they were actually originally thinking they were going to raise them 3 more times this year, because I mean, the Fed's ultimate goal, and they've even stated it, is to slow the housing market, slow job growth, because those are like some of the key proponents of inflation.
Mm-hmm.
And that hasn't really happened. Like the housing market nationwide is still pretty absurd. I think if you look at the whole national market, like price points are down 1% this year. They were expecting most experts were expecting a 3% drop in home appreciation. So I think there's just a chance they raise in July 25 basis points and then hold to the end of the year and then start cutting in 2024.
Yeah, I mean, that'd be ideal. I think that's what most people are hoping happens. Yeah, it'd be interesting to see. Obviously, the CPI data was a good thing for most investors, but again, until the Fed reaches their goal 2% overall inflation, they're probably not going to do any sort of stalling or reducing in rate hikes, or reducing the rate overall. So hopefully, the sooner that happens, the better it'll be for everybody. Yeah, I mean, I think what we're seeing here in the Cincinnati market is, like Eric mentioned, I mean, listings that are in good areas, retail listings are still going super fast, multiple offers. I have one going live tomorrow in Eastgate, so it'll be interesting to see if I can get multiple offers on that one. It's like a starter to second level, second house for most buyers. So that seems to be an area that has a ton of demand still. And on the investment side, I think I mentioned this on the last call, but like every single investment lead I've been able to sell before it hit market. So, I mean, investment property is still in very low supply, high demand. So unless there's a major economic shift, I don't see that changing, even with rates potentially increasing again. As far as the actual investment market, I think it's been kind of stable the last few months. I think that rent has had minor growth. So like all of our renewals we're doing right now we're getting very minor increases across the portfolio. I haven't been trying to push rent growth because I'm trying to keep good tenants as well. So I haven't been nearly as aggressive as I might have been the past couple of years with the way rents were increasing, double digits. I just renewed today my corporate lease for the Norwood property, and I gave them a 5% increase, and they pushed back, and I think they asked for like a 3% increase, which I agreed to because, I didn't want to have to try to release that. And they've been a good tenant. They're happy with us. We're happy with them. So, I think you'll see a little bit more of that. Some of you guys that have leases coming up this year, I think you'll see where if you're under market, you can definitely, move higher towards a market rent. But if you're already at market rents, you're not going to see a significant growth like we have in the last couple of years. But I don't think that nothing I've seen has shown any lack of demand or something that would indicate to me that rents are going to be falling, or at least falling at any level of significance in the near to midterm. When we put up units for rent, we're still getting a ton of activity, a ton of contacts, and getting a lot of qualified applicants that are ultimately applying. And I think a lot of that comes down to marketing as well. I mean, you have to market your properties well. They need to show well, and hopefully, when you're doing your updates, if you're doing any renovations, you're producing a good product that will help, help drive demand for that product. But I know when you read national news, there's been some, I've seen people that are kind of fearful of rent and housing demand in the near to midterm. And I don't think it's necessarily going to hit Cincinnati, or like Eric said, maybe it will, but maybe it'll take a year for us to have that kind of impact that some of the other markets are seeing. So any questions, yeah, Todd, go ahead.
Yeah, two comments, Joe, and then I got a question for Eric, if you don't mind.
Mm-hmm.
First comment was coincidentally last week in our sales meeting, our affiliate loan officer was given kind of the market update and actually cited Tampa, the lag in Tampa and days on market. And then to hear Eric with boots on the ground there saying the same thing really, kind of hammered home that point. And so that was kind of cool to see. And kind of same message as Eric, kind of those coastals might be a leading indicator. And then the other note that he brought up, which I thought was interesting, was the student loan forbearance September 1st, with the millions of people that are going to have to re-engage with their paying their student loans. And I'm trying to rack my brain. I think it was like on average, the statistics are like, now that's going to be an additional, on average, like $400 a month payment for millions of people, which then may impact, the Fed's, you know, raising rates again, of what that might impact. So that's like kind of something on the horizon as well that they cited that I thought was interesting to kind of, keep tabs on. So just wanted to pass that along. And then just, Eric, question I had was, with the days on market, are you seeing quicker price adjustments or anything like that? Just kind of was curious what you're seeing with boots on the ground there in terms of price adjustments, or people still holding out steady with kind of a different paradigm, if you will, if they haven't shifted just yet.
Yeah. I'll start with like one of the first things when you're talking about your loan officer. If you're an agent or an investor, find a loan officer that you really trust. I have one with NRL that I talk to pretty much every day. We talk for about an hour or two, and it's always about what he's seeing in his business, because I've seen what he sees in his business is a really big indication of what I'm going to see in mine. So, for example, when rates went above 7% last week, it was the highest since November 2022. He led the entire company, which I think they have quite a bit of branches across the United States, and he had 2 loan applications. So those rates have like a lot stronger of an effect than people think. Now, luckily, they dropped down this week, but especially if you're an investor too, you should be talking to a loan officer that you trust and does a lot of work, and see what they're seeing, because it's going to give you a really good idea of what ends up following to the agents, because that's usually the first point of contact. Days on market down here, like I said, it's like 52 or 53. It's quite a lot. One of the ways that we're trying to grow our business down here is the same thing I did in Cincinnati, which is running a ton of open houses. Just about every agent I've reached out to for open houses, ironically enough, the week that I plan on doing an open house, they plan on doing a price decrease. So in Cincinnati, our average sales to list price ratio is like 102 or 103%. So that just tells you that people are paying over list price for houses. In Tampa, we're at about 96, 97% right now, depending on where you're looking. So people are a little bit more aggressive with the price decreases. And that tends to happen anytime inventory increases the way it has down here. Even though we're still below a balanced market of 6 months of supply, you have more competition. There's 14,000 homes out there. So if I'm showing a buyer 20 homes and they're all in a similar price point, they're going to look for the one that has the best finishes for that price point, or the one that they can get the lowest price on to do the finishes that they want to do. So we've definitely noticed like our price reductions are way up here, whereas like in Cincinnati, our price reductions are way down because of the inventory. So I think here it's a little bit different anyways, because most of the people moving are moving out of state. You don't get a lot of people, well, you do, but it's, if somebody's moving, they're moving out of state, or they're moving in a different complete portion of the state. You don't have a lot of just moving up per se. So they're typically more motivated anyways, but definitely seen that, the price reductions number go up here. And for example, we're running 4 open houses this weekend. All 4 are doing price reductions this weekend.
Great. Thanks, sir. Appreciate it.
Yeah.
Awesome. DJ, do you have anything you want to share? Any lessons, wins, or challenges you're dealing with right now?
On the duplexes, you guys were talking about like the rent increases and everything, and I've had 2 vacancies come up, and I've been able to the one, when everybody was raising their rents with COVID and stuff, I just threw a number out there, and I was able to tenant it at a rate, and I just re-tenanted it at the same rate, and I was able to tenant the building or the unit beside it at the same rate So it's and they're both in South Lebanon, and I mean, I had the second unit I didn't even need to advertise because I had so many people apply to the first unit that were actually qualified and stuff. It was it was it just surprised me. I don't know. I don't know what I had in my head, but it was kind of a nice surprise to not have to, have them set empty or anything for a long time. But so that was
Yeah, I think that, I mean, to that point, if you watch the news, which I try not to, if you read articles, if you listen to current events podcasts of different, business or real estate, I think we're hearing a lot of doom and gloom and fear, depending on who you're listening to. And so I think a lot of us might have this kind of notion that it's going to be challenging to fill units, or we might have to do rent decreases, or offer some sort of incentive. Again, I don't think that we've seen any of that in our market. At least I haven't personally, and I have a pretty decent, spread of neighborhoods on the east side of Cincinnati and Claremont County. So I haven't seen that, but I think that if you're in a more expensive market, it's obviously going to be more difficult to pay your bills once interest rates increase, which cause housings to go up, which cause rent to go up. If you have student loans that are now collecting interest and you have to start making payments again with the cost of everything else increasing, it squeezes everybody. And housing costs is, across the country, one of everyone's biggest expenses, especially renters. And I think that limits and reduces demand in certain neighborhoods in certain areas. But, I think in the Midwest, at least for the time being, we're in a pretty good spot from what I've seen. Anything else you wanted to add?
Yeah, just a update on the Montgomery, the Norwood properties. We're waiting on a closing date, so we're very close.
Awesome.
Hopefully
Yep.
by next month we'll be having different conversations on.
Yeah. Looking forward to starting on that. Angela, what about you?
Congrats, by the way, DJ. That's super exciting. So, things are going well. Like I was telling DJ and Todd, pretty much got rid of all of the knob and tube on the second floor in my duplex. Um, got the hardwood floors refinished a few weeks ago, 3 weeks ago, I think. I gotta install a couple more lights, and then I'll be ready for paint. So things are going well. We've been looking for a couple more units, but again, it's nothing pencils out, right? I'm trying to get creative. I keep bringing it up at work. I've been running for dollars around my area. Um, House right across the street from my duplex sold for like 20K over asking within a day, right? And then as soon as that one sold, the one right next to it hit the MLS and sold as well, right? So there's definitely a lot going on, a lot of activity, not enough supply, just like you guys pointed out here in the Cincinnati area. And again, running for dollars and trying to get creative. Um, there's a property not too far away from here that I was able, it's not for sale, but I was able to get in contact with the owners, and they want to sell. They say they want to fix it up and put it on the market. I have offered to buy it as is. I have no clue how much they want for it. I have a number in mind, but again, just trying to be creative, see if I can add a couple more units. But other than that, things are going well, cash flowing. Engage and I have also been looking at a seven unit building in the Incline district. It's an area that he really, really likes. I'm learning more and more about it. And we're trying to see if we can come up with some kind of creative financing. Definitely we want to keep as much cash in our pockets as we can right now. So that's what I got going on.
Awesome. Tiwi?
Hey guys, long time no see. Good to see everybody again. So yeah, lots of updates since I've been away for a while. So in the win column, finally closed on my refinance. So I finally got that one in the books. So like I bought that one March or February 2022, renovated it for 9 months, got hung up on some zoning issues with Norwood, but praised for 1.68. The new debt on it is 1.1. I think we got like I don't remember the interest rate. Maybe it's like a 6, maybe it was like a 5 or high fives. But I like the monthly payment. Learned a lot of lessons from that one as well. So I think one is to check the zoning. So you don't get tripped up on that. And one is to know a lot more about electrical. I think I spent way more on electrical than I thought. I'm still looking at the service upgrade right now. So now I know about the ins and outs of rewiring an apartment. And just to enjoy the journey more. It took a lot of work, and honestly, renovating those apartments, kind of felt a lot better than like getting a big check at the end. So yeah, I think I have to stress out less when you're in the middle of these deals. What else? What else is going on is that I'm looking for deals. So like everybody, it's kind of hard out there. It's slim pickings. I think I saw the 7 unit that Angelo's talking about, if it's the same one. That one wasn't a fit. So I've been looking at some others, been writing letters, getting letters in the mail for my property, planning a trip to St. Louis if nothing else pops up, just because I've been studying that market for a while. So may have to go there just because the things I have put offers on, like a 12 unit, 2 12 units, an 8 unit in Norwood. The sellers just don't seem that serious to me. They just have like lofty prices, and you put in a good offer just based on the NOI or just potential NOI of what it was worth if they were renting it for market, and can't even get them to counter. So it just seems like it's like a Zillow make me move price. That's what I feel like I'm running into. But yeah, that's where I'm at.
Yeah, man, you brought up a lot of interesting points. First of all, congrats on that appraisal. That's and that refi. That's incredible. So it's worked out to what, 168 a door, ultimately.
Yeah, and I got 2 more units to go, so I'm locked into a 10-year loan. But glad I got it across the
But
finish line.
the building's 10 or 12.
It's 10 units. We renovated 8 units.
Wow, that's awesome, man. That's incredible. And yeah, as far as what you were saying about sellers, I think you're absolutely right. Part of why I've transitioned my focus to basically buying any good deal and not just focusing on the mid-sized multifamily is because I was finding the same thing. Almost all the sellers they're kind of just throwing out like, oh, if I could get this completely ridiculous, unreasonable number that makes absolutely no sense, yeah, I'd sell. And I think that's like 90% of the sellers out there right now in that space. Let's call it 10 to 50 units. They all seem to kind of fall in that category. Very few of them are serious. Very few of them are motivated. I don't think many of them have to sell. I think a lot of them are just like willing to, again, if they get that make me move type of number. So it's frustrating. I feel your pain on that. And again, that kind of shifted my focus back into just broader marketing and deal flow and taking what makes sense, even if it's a single family or whatever. If it makes sense, I'll do it. And that's kind of where I'm at. But yeah, thank you for sharing. Gage?
Yeah, sorry I'm late. I'm in Chicago and there's a time change. Forgot about it. So I'm not sure what I missed, but I'm sure it was good stuff. So I might have to go back and rewatch this later. I'm glad you record these, but dude, is that you, Joe? Oh,
Yeah.
you're looking young, man. I think Angela should do that next.
Yeah, probably took 5 years off my face. No, I heard Sarah's dad is has a big bushy mustache. So me and my brother-in-law and my sister-in-law's new boyfriend, we all shaved our face, grew out the mustache, and dressed up like him for his birthday like a week ago. And then I looked so horrible with a mustache that I had to shave it off the next day. So now I'm all back to square one, starting over again.
That's funny. So what are we just giving updates?
Yeah, just just kind of general what you're seeing in the market, any wins or issues you're dealing with, and we're just having a group discussion. And then if you want to hit any goal updates while you're at it, go ahead and do that too.
Sure. So for mine, I'm still in the single family. I'm just waiting on a plumber to come in, the one there in Cincinnati, and get to work. That's kind of what my biggest holdup is. It's also like my biggest expense. He's taking the plumbing and bringing it up a level, and then he's adding a toilet, sink, and a bathtub, or a shower, bath and shower. So just waiting on that. I can't really do much more with that house. Like Angelo talked about, he and I had started looking at a 7-unit deal, which we're still kind of in the midst of doing, just trying to figure out if we can make things work. We got to tour a couple of the units, and so we'll stay tuned with that. Angelo and I also had the opportunity to do a FaceTime or a Zoom call with Bill Ham. He wrote Creative Cash, and that was really cool and interesting to do. So that was a really cool learning experience and just like a cool thing to do. And let's see, goals. Just still plugging away at it, still writing my goals down every day and working towards those bigger ones. And I've got Kilimanjaro here in like a week and a half or 2 weeks. So just looking forward to getting that goal nailed down.
Awesome, man.
What about the Survivor thing? I feel like I actually saw like there was a Survivor casting call somewhere in Ohio, and I thought of you when I saw that.
I know that, but I'm gonna look that up now.
Hopefully you didn't miss it.
No, I don't want to miss it. The Kilimanjaro is kind of like that's a life goal, but that's also another test for me to go out and camp and be on the side of that mountain and all that without any electricity or anything. So I think it's a good warm up. Sure.
Awesome, man. Todd?
First thought I wasn't going to make it tonight because I got a call. My wife and daughter got rear-ended and smashed in, and that made me think back to a couple months ago when I missed because my daughter broke her arm. So I was going to petition Joe to move it from Wednesday because it seems Wednesday seems like either they're not going out of the house or we're jinxed or something. But yeah, they were fine. Cars a bit smashed up, but not a call you want to get. But yeah, nothing, just moving forward one step at a time. Really just focusing on the agent stuff. Just talking to people, trying to make new connections and everything. If it's okay with you, Joe, if I can ask a quick agent question to you and Eric. Eric, you mentioned open houses, obviously with the market and everything, the limited supply up here, definitely still an issue. In your past experience, and Joe, you can chime in as well. What's protocol in terms of if reaching out to somebody that maybe doesn't know me from Adam, but at least within my office and offering to host one of their open houses?
Yeah, I don't know. It's going to be very dependent on your broker you're with, but
yeah,
when I started, I was at Sipsey Klein, and Sipsey Klein, I worked in the Montgomery office, which was notorious for like higher end listings. So like, Montgomery, Sycamore Township, Indian Hill, Madeira, that was like a lot, Kenwood, that was a lot of the markets that those agents worked. So when I first started, I kind of got in with those agents that were doing a lot of volume. And I said, hey, look, I know a lot of you have 10 listings every week and you can't be at 10 places at once. So whatever houses you need an agent to host an open house for, let me know and I'll be there. And I didn't do it for very long. I probably did that like a couple weekends a month for a few, my maybe first 3 or 4 months when I first started. And I don't think it actually ever led to a deal for me, but it was definitely a good experience. And it probably taught me that I didn't really want to focus on retail, even higher in retail. That's much more of like a relationship business than it is a real estate business, if that makes sense.
Yep.
You know, and I learned that like even if people signed it, so you know the whole deal as an agent is you come in, you sign in, that's how you get their contact info. If people are smart, they don't make they give you all fake info. But the people who don't know the game, they give you the real info, and then you start calling them and emailing them. But what I learned is that like these people who were buying, you know, and this is 7-8 years ago now, buying 500, let's say 500 to like 2 million was kind of the range back then. Those people weren't going to hire me. You know what I mean? Like their cousin's, you know, nephew was an agent, or their, you know, their doctor's son was an agent, or whatever. Like almost all of them had someone in the family who they've known for 3 generations that they're going to work with. So I think it's unlikely that you're just going to step into that market as a brand new agent and take a lot of leads. I'm not saying it's impossible, but I'm just saying that I didn't find it to be a great use of my time personally. But Eric also does a completely different type of business than I do. So he may have a totally different perspective.
Yeah. One I didn't think about, I usually take walks when I do Zoom. So if it's loud in the background, just let me know. That's my bad. Yeah, I honestly hate open houses. It's one of the things in my business that I just despise it. I think it's stupid. 90% of the people that sign up, like Joe said, they've either got an agent, there's some music. They've either got an agent or they're not going to use you. The thing is I use it as a way just to get branding done. So we use branded open house signs. So every house that we do an open house on, we print out door knocking material. We do branded open house signs. We have an iPad that's tied to our CRM. So we actually don't get fake information anymore. Ironically enough, we paid for like a super expensive iPad stand. And it looks like if you go into a dentist office and you go to sign in, so people think that it like fact checks their information. So I always get the right information now, which is awesome. I get a lot of people who get pissed off. But I'm just like, look, the thing is when you're newer, like you are, it's good just to have conversation. It doesn't necessarily have to lead to business, but it builds up confidence in you.
Yeah.
We do it in this market just because we're brand new. I'm throwing signs in the yard. People are seeing our branding everywhere. I go knock on the doors. Most of the people tell me to go screw myself. That works. I just hand them the information. I go, look, like, you never know. If anything changes, we'd love to help. So there's some agents that do open houses just for business. Like I said, I hate it, but it's one of those things where as an agent, you kind of have to do stuff that you're super uncomfortable doing or just don't really enjoy. And you never know. Like I've picked up buyers from open houses. I've double-ended houses because a buyer came in. So you just have to go out there, and the more you do it, the more business you'll get. And then when you're reaching out to agents, I just reach out to people with your brokerage first. And I always just call them and I go, look, my first goal is to get the house sold for you. My second goal is to pick up buyers. They tend to like that. I let them know all the stuff I'm going to do. We have an electronic sign in. We have follow-ups. We have information printouts. We have kid goodie bags. We have branded open house signs. We knock the neighborhood and ask neighbors if they know anybody who wants to move in. I would say like 90% of the agents we call want us to run an open house because we make it this whole event. So just kind of depends.
Yeah, and that's kind of my main thing is just get reps, you know, get my feet in there, and if it leads to a lead, that's great. But if not, it's just I just feel like I need to get a little more traction, and you know, I don't want to step on any toes and with the unwritten rules. So that's why I was curious because you guys have been there, done that. So it's helpful.
Feel free anytime you want to reach out. Like we've got 3 listings coming up this weekend up there. Like we have the team running it, but you're more than welcome to stop by with them. And if you pick somebody up, I really don't care. I mean, my guys have more leads than they kind of know what to do with right now anyway. So I feel kind of bad that I threw the 3 open houses on them this weekend, but at the same time, I'm like, get over it. They're typically great. Cincinnati, I will say, when we did open houses up there, I despised them because of how busy the market is. And people, like, so many people come in, you can't even have a conversation with one person. At least down here, it's a little bit more intermittent. It's actually like kind of a positive. down there, you get like 70 people that come in. You're like, all right, screw it. Like, I'm not talking to one of you. Just go look at the house. Let me know what you
Yeah.
think and get out.
Gotcha. I appreciate it, guys. Thank you.
Yeah, and I mean, back in 2016, the market was entirely different. It was more like what he's talking about, and especially at this price point, you might have 5 or 6 legitimate buyers come through. So it wasn't like the mad dash where you got, 50 people coming through. So yeah, different time and a different market.
Yeah.
Um,
Gotcha.
yeah. What?
Thank you.
Yeah. Anything else?
No, that's about it.
Cool.
I just had one more agent question since we're on that topic. I was wondering, Joe, Eric, is there like a general protocol for how long as an agent you should wait to accept an offer? Just because in my experience, like my girlfriend's looking for a duplex and like we've seen stuff at the market, and I swear it could not have been on, like we saw something like Tuesday afternoon and our agent went to put in an offer like Wednesday morning and they said we accepted one last night, but it could not have been on the market for more than like 8 hours. So like 2 people saw the house, like us and the people before us. Like, is there like a protocol there? Like, are you even doing like your fiduciary duty if like you're not waiting to get like at least 2 offers to compare in a hot market?
Well, I mean, there's a lot of factors, but if it could be a few things, it could either be it was sold before they really listed it, which again, that happens a lot, especially investment property. So they could have already had a buyer lined up, or another agent in their office or in their brokerage had another buyer lined up. So they're already kind of putting that deal together before it went live. That happens quite a bit. 2, it could be that they just got a ridiculous offer that they couldn't refuse. So it's like, if your goal is 250 and you get a cash offer, no contingencies at 275, are you really going to take the risk of waiting 3 days to try to get better offers and risk losing out on that 25 grand, no contingency? That happens, especially in this market with low inventory. So, and at the end of the day, our job as agent is to present the information to our client and guide them and give them information, but they have to make that decision. So if they get an offer they really like, whether it's 30 minutes or 30 weeks into a listing, it's up to them if they want to take it.
Yeah, typically what we do with our retail clients, if an offer is accepted really quickly, is we just let them know, like, 99% of the time it's some crazy offer. It's a cash offer or it's no contingencies. It's way above the ask price. The agent presents it to the seller and the seller goes, I'm good. I don't want to leave my house any more times this weekend. Do you think we're going to beat this out? And it's like, probably not, especially with the contingencies and all that being waived. And these are strong buyers or quick close, and you call it a day. I would say actually probably 90% of our listings end up that way. We let our clients know we're going to list on a Thursday and you'll probably have an offer accepted Friday or Saturday morning. Just because we get so many offers in that it's like, you can wait out to the end of the weekend and see if maybe you might get 5,000 more, but all these ones might expire. So it's a risk you have to weigh.
And so you do list houses that are already under contract before they hit the MLS kind of?
So we don't, if we do something like that, like if we sell it, it's sold before sent. If we do that, we don't put it in the MLS until it's completely sold. For multiple reasons. One, it affects your days on market. 2, if I'm shopping it to somebody like that, depending on where the price comes in, it might be different than what we listed at. So there's just so many factors that we typically just do wait till it sells officially and then put all the documentation in the day it sells and mark it in the MLS as sold and move on. There's agents that do it. Something else to factor in, which there's 7,700 agents in Cincinnati. I can promise you maybe 10% of them are actually decent agents. So sometimes you even get agents that the offer is not even that strong. It's just the agent's new or doesn't care, or doesn't know what they're doing, or they're just looking at collecting a commission. And as soon as they get something, they tell their sellers, hey, let's take it, move on. So definitely factor in the fact that there's a lot of agents that maybe aren't the greatest.
Yeah, I don't even think it's 10%. That's generous.
Yeah,
Yeah.
good point.
Yeah. Yeah, they like I said, there's a lot of variables, but and to his point, like if I sell before sent, meaning like, I have it sold before we even go to market, I don't even put it in the MLS at all for a few reasons. But a lot of my deals are entity transfers, so I'm not going to put the value on the MLS. That's one major reason why I don't do it. But also you know, if it doesn't actually go active in the market, then you don't have to upload it. But a lot of
Yeah.
brokers probably want you to, but I typically don't.
The only reason we do it is for appraisal information. So like the only reason we do it, even if it's a house that needs work, is just to try and keep comps updated. Or if somebody's wanting to know what happens with the property, but I mean, you're not wrong. Typically that seller's going to get, our new buyer's going to get nailed with a bunch of solicitation and everything else. So kind of a million ways to go about it.
Yep. Cool. Any other questions about any of that stuff?
I kind of thought about it. Do you guys know what the average price point in Cincinnati is off the top of your head? Does anybody know the number?
Like 250 ish.
It's fair. Do you have any other guesses? I have the number, but it's stupidly shocking.
What is it?
All right. 300,000 is
Oh,
the
really?
average price point in Cincinnati. Yeah.
Yeah.
250 was what it was like a year and a half ago. So, and Cincinnati is one of the highest appreciating markets. But when we did our market update, we do monthly updates. When we did it for July, we're up to 300 now on the dot for the average price point.
Is that like year to date or is that month over month?
So that's compared. So essentially, it's July this year to July last year. We run it at the beginning of the month because that's
the year over year difference. Or
yeah.
Okay.
And I think last year we were at 260 at this time. So still about 10%, a little bit over 10% appreciation. But I thought that was absurd. So like your average home in Cincinnati's price point now is about 300. And obviously there's stuff underneath it, but I thought that was a weird kind of anomaly.
Yeah, I think the last time I looked, it was like 268. So yeah, that is interesting to see it's jumped up that high. But I think a lot, we talked earlier this year about the way the retail market was changing. And I think that a lot of the people that are moving are those people going from like second or third to like forever home. And so that price point is obviously much higher, at least like on the east side where I do a lot of business, it's like you can't hardly get a house with like for a family under 400,000. I mean, it's increasingly difficult. And when you want more space, now you're talking 5, 6, 700,000 price point. So I think it seems like those are retrading faster than like starter homes, which is causing, I think, that average to increase as well.
Yeah. And I was going to say, like, even if you look at like the homes in Forest Park, like, if they're decent size, 4-bed, 2-bath, 1,800 square feet, it's usually 300. Whereas before that was like low twos. But it's like quite a big change. And then when you throw in the fact that the interest rates are at where they're at, you have to think the average person's mortgage payment right now is about $2,400 a month, which is a decent amount going into mortgage. But we're up about 10% year over year appreciation. Like Cincinnati was the first half of the year number one. I think St. Louis is number one now. But it's kind of absurd to see how quickly it's pacing.
Yeah. Well, I guess it's a good sign if you're holding, and it's a bad sign if you're buying. But I think you gotta take what the market gives you sometimes, unfortunately.
I got a quick question, if you don't mind.
Yeah, go ahead.
So I could probably just look it up real quick on Google, but I figured I'd just bring it forward and see if anyone else has any thoughts or anything. I know that the taxes, I've been hearing all this stuff about taxes changing here in Cincinnati. I don't know if they're changing the rate at which the taxpayers will be paying, while also, or no, it's a new assessment, right?
Mm-hmm.
So everyone's houses are getting assessed, and as you were just saying, the values of the house went up. So that means that the taxes will be more. So is the tax rate staying the same in the city?
I don't think, and you mean like Metro Cincinnati city limits?
Yeah.
Yeah, I mean, I don't think there was any new mills that were added for like the ballot last year. Not that I'm aware of anyway.
I think Butler County is raising their tax rate.
Butler County, yeah. Yeah, I don't think Cincinnati did. I know the year before that they passed another Parks District bond, but that was the last one I saw that actually affected my property taxes. And
I'd be
that was
interested,
countywide too.
okay. I'd be interested to talk with you maybe later, Joe, about what you saw with your 28 unit, because I did get my letter for my 10 unit, and that thing jumped. Like it was like I mean, like the new value, they probably like doubled it or something close to that. So I mean, which is like in Norwood was like this nice little pocket, which is why I liked it. Like the property taxes were pretty low there. But I don't know if it's the 6-year assessment or if it's the new auditor, Bridget Kelly or whatever, but like they really jumped for commercial.
Yeah. The last time I looked, it hadn't updated yet. Let me see if it is.
Yeah, it's interesting to me because I don't know how they do it in Cincinnati. In Indiana, they have a set amount of taxes they can collect, which is capped. And so I wonder, because if the tax rate stays the same, it doesn't mean they can collect more taxes. Or if the assessment goes up, if everyone's houses go up, it doesn't necessarily. If it was Indiana, they'd still collect the same amount of taxes unless they increase that amount as well, which is called a levy. And I just wonder if Cincinnati has increased their levy to go with the new assessments or what
No,
the
so
plan.
I just read a very detailed article describing everything you're saying, and I never fully understood the point you're making. But that it's main like so like what you're talking about mainly is affected by school district because like let's say Deer Park, for example, when I was a cop there, we passed a huge bond to build a new to like double the size of the middle school, and they did a bunch of renovations to the high school. And they did all these different like restructuring with the school district. Well, whatever that was, I don't remember the number, but let's say it was like a $50 million bond or something like that. Like you just said, if everybody in the school district taxes assessed value increases, they're only collecting that amount. So actually what can happen is in some cases your amount you owe won't change at all, or it'll change very slightly because they're already hitting, they're already collecting what they're required to collect. Yes.
Right.
And like some people, like if let's say your house was only valued at like 50,000 and now it's 150,000, they're going to see a drastic change because they were paying such a small percentage. And that actually could make it where if you had a higher price point house where your percentage of contribution is actually lower, if that makes sense, because they're now collecting, it's like all these boats are rising in the tide. Well, the boats that were already the highest are staying where they're at and everyone else is coming up to meet them. So your burden could potentially be the same or lower. So it's kind of interesting. I never really understood that dynamic, but to your point, there are certain things that are strictly affected by a mill, meaning a percentage of value, and not based on a total like bond amount, like a school levy would be. So yeah, it'll be interesting to see. But to your question, I just checked and they still haven't updated. They have not updated my value on Devotee. The cool thing with me though is that I just looked at the assessed value and it's like 590, and the last recorded transfer was 600, and the last two sales were entity transfers since the last assessment. So I'm hoping that there won't be a major change. But I do have an update on that. And we one of the units we were working on this past week, we had to take aluminum wiring out of, and of course, while we were stripping the aluminum wiring, an inspector walked in. So he now he wants permits for a bunch of stuff that we're not even actually really doing, which is frustrating. But so yeah, now I have to get architectural plans made, fire rating up to code, which we were already doing, but now I have to get a permit for all that stuff. I mean, the good news is they didn't say anything about any of the other units we've already finished and leased, but it's annoying to have to now probably delay these turns by a couple months, and have to get permits for what should have been just a cosmetic update that is now because of the aluminum wiring. I'm basically being punished into doing jumping through a bunch of other hoops. So that was a crappy experience this past week, but I've been through it many times. So the one thing I'll say to everybody is that experience is definitely the best teacher, because it's like, had this happened 5 years ago, I would probably be having a meltdown all week. And now, having gone through it so many times, you're kind of just, you're kind of just immune to the you know, frustrations that come with real estate, and you get used to them, and you learn to just focus on what you can control and not dwell on the things you can't control. And you know, if I gotta waste a couple months and some extra money to get permits, then it is what it is. So yeah, that's one of my non-wins for the past 2 weeks. Other than that, though, that building's been going well. I've been focusing a lot on since our goal call, that was, I think, our last call. I've tried to get back on the horse with daily journaling, writing down my goals, trying to write out specific to-do list of my most important next steps and the things I need to accomplish today and tomorrow. I've gotten a little bit better at that every day since our last call, so that really helped me kind of focus on some of the things I was doing that were helping drive success. So hopefully I can stay on that. And I'm focusing a lot right now on just business stuff, because I'm trying to set some new business goals, and I've even looked at maybe potentially partnering with somebody to help me grow my business, because I feel like I'm at a point where the last couple of years I've kind of stagnated. Like, I've done everything I can do by myself, so to speak. And I look up to some of my mentors and some of the people that are 5 or 10 years ahead in their journey, and none of them have done it alone. So like, all the people I look up to and all the people that I kind of want to be when I grow up, all have partners, almost all of them, whether that's just, you know, pieces of their business or all of their business. So I think finally coming to realization that if I want to continue growing exponentially, that I have to give up control, and maybe that means, you know, giving up ownership of some of the pieces of my business so I can continue to expand. And that's something I'm working on right now, and trying to figure out what that looks like and how to go about that intelligently. So that's been a big chunk of my time, but it all kind of coincides with some of the things that we talked about at our last call, where, you know, writing down our goals, being very specific and meaningful about why we're trying to accomplish them and how we're going to accomplish them. And that kind of led me down to this, something that I've always had, you know, I kind of known that at some point I would have to do, but it's really caused that to resurface and become a priority of like actually taking the action to make that happen. So I'm working on that. Hopefully I'll have some progress on that coming in the, you know, next few calls. But yeah, other than that, I think I'm waiting on permits on 5 projects and soon to be 6 with DJs. So architects have become my biggest bottleneck in my business, and I would have never thought that would be the case. I guess it's a good problem to have, but it's frustrating. Anderson he hooked me up with a good architect, so I'm working with him on a couple of sets of drawings right now, but it's just a slow, tedious process, just like permits. It's like, you know, I have zero control over that process. And we were working with an architect on our 5 unit. They've kind of ghosted us. I don't know what's going on with that. So my partner on that deal is trying to get in touch with them, but it's just a very slow grind on all of these deals to get, you know, permits made. So it's frustrating. But yeah, I think that's all of my personal updates in business and real estate.
Could you maybe post that article you talked about, Joe, with the property taxes one?
Yeah, I'll try to find that. It's been a few weeks since I've seen it, but it was yeah, I'll see if I can find that or something similar that was breaking down how and I think it was a national, it might have been like Apple News or whatever it was. It wasn't like local, but it was explaining how, you know, like I said, bonds and levies are different, and how they actually affect what you pay versus your value, and how those all are related. So Anderson, are you here? I know he said he was trying to get the kids to bed, so he may not be back yet. But any other questions, comments?
Yeah, I'm here. Sorry, I just got
okay
my teething baby down.
Yeah, I get it. Yeah, you wanna give us a update on what you're working on and your deals?
So yeah, like you said, the architect is the biggest bottleneck for me right now too. I'm waiting on my architect to basically we basically signed off on final drawings a couple weeks ago. And then he had to have the engineer, because it's commercial, do all the engineer drawings for HVAC, plumbing, electrical, and the holiday, the weird weekend. It's like nobody probably worked that week. I'm told I should have finished drawings this Friday, but I'm not counting on that. I'm thinking sometime next week. So really, I already, based on the conversation my architect had with the building inspector, what we've talked to the building inspector about, we already framed the apartments on the second floor, and then we already gutted the one commercial unit, and we're basically taking a risk doing that. But from the conversations we've had, everything sounds like we're going to be approved. Reading is one of those towns where it's like Barney Fife is in charge. So I'm not really expecting any pushback on what we're trying to do. But again, it's a risk, but it's also a calculated risk where I don't want to sit still for a month and a half and do nothing. So really, at this point, I got my subs expecting the drawings emailed to them by the end of this week, and then hopefully get my HVAC guy in there next week or the week after, and then just hit the ground running with all that.
That's awesome.
So that's kind of it for now. Yeah.
Yeah, I mean, it's literally such a problem that I've considered, because most of my deals I don't need engineer stamps. I just need literally paper, like a drawing of layout. And even getting something like that turned around, every architect I've talked to is like 2 to 4 weeks minimum.
Yeah,
and
it's. Sorry, go ahead.
No, I was saying, like you said, it's like even when they tell you 2 to 4 weeks, that's really like 4 to 8 weeks. Is what I've seen.
Yeah.
So
and it's funny, like everyone I've talked to in the past has this great architect that they work with, but I've kind of been loyal to the guy that I started using because he's a family friend. I grew up with his kids. He helped me when I was just getting started. So I've been loyal to him, but then I feel like everyone, like even Joe, you included, and another guy, like recently have reached out to me like, hey, who are you using for your architect? Like my guy's like not getting back to me, or he sucks, or he's too slow, or ghosting me, or whatever. So it's like, I don't know what's happening, overall, but it seems like architects is a common problem through everyone I know in real estate right now.
Well, I think it's just a shortage like everything else. It's funny because I feel like labor has finally started to pick up. Like my subs are actually calling me looking for work. Like the last couple of guys we've hired, we didn't have a huge challenge hiring people. So that's catching up. Material lead times are catching up. But now it's like, I don't know if like all of that all hit at once, and now these architects are just overloaded. I don't know what it is, but it's been, yeah. I mean, like I said, I have 5 and almost 6 projects that are just literally, like you said, sitting on the sidelines, and it's really frustrating knowing I can't do a whole lot of work.
It could be an anomaly, and it's just our little circle of people are dealing with all the same thing at once, but it is weird how it's like a common issue with almost everyone I've talked to.
I think the lessons here: tell your kids to go to architect school, and maybe they'll have plenty of work to do. I always thought I was going to make my kid be a plumber, and now I'm thinking maybe I'll make him be an architect.
So when we did the one flip in Norwood, basically my wife, she has a background in like graphic design and all that. She drew up like a little kind of, probably spent a couple hours on it, plan of this house we were doing. And basically it wasn't engineered architect or whatever, stamped drawings from an architect, and City of Norwood passed that. But I believe that was because it was only residential. Anything beyond that's going to require a stamp. And I believe nothing we did was structural. We were just moving some partition walls around. It was a shotgun style house. So that didn't really require like an architect or engineer to be involved, but Norwood approved them like right away.
Well, and another thing I found just in the last 7 years is that what most jurisdictions want now, even on simple drawings, like you're saying, they want reference to whatever code section you're calling for with whatever you're trying to do. So it's like, even if you can make back in 5 years ago, I could make a simple sketch on like a deck or a simple drawing and usually get it passed. Well, now they're like, okay, well, give us your load calculation for your beam. Well, okay, well, what section of code is that referencing for that load to be appropriate? And it's like the drawings have become, and I think this was literally as of the 2020 code, the NEC, the drawings have become so detailed and complicated that they require that, like, even literally a deck, like we just did a deck in Norwood not that long ago where it was like 10 pages of drawings that we had to submit to get it approved.
That's crazy.
Yeah, I mean, I think it's just the code now, and what these plans examiners are requiring are so detailed that you literally have to be an architect to like submit a bathroom drawing, you know, to turn a full bath or whatever. It's ridiculous. Which is why I tell a lot of my clients, like, unless you really have to get permits, it's, you know, probably not worth it. It could literally
Yeah.
double the cost of your project, especially if it's small. And
And double the timeline.
And just like I'm dealing with in Devotee, I'd rather ask for forgiveness than permission, because the penalties aren't nearly as painful as what they actually make you do on the front end. So it's like I'd literally rather just deal with it, you know, in hindsight.
Yeah.
Cool. Anything else? Any other problems anyone's dealing with they want to discuss? Questions? Cool. Our next call is going to be on the 26th of July, and we either have a guest speaker for that one, or hopefully all of these issues that we're all dealing with will have some updates, if nothing else. Hopefully DJ will get his property closed, and you guys out there deal hunting can find stuff. And Tiwi, good luck on your hunt as well. That's hopefully you got a chunk of money out of that to go out and spend, and you can find a good deal to put it in.
That's the problem.
That's a good problem to have. That's you know, a lot of the stuff we're talking about is good problems to have, I guess, but it's
I missed it. How did you get your refinance approved, or how'd you work around that with the zoning issue?
Well, after the fact, when I closed, just yesterday, I went to the Norwood Zoning Commission, the city council with the mayor, and they finally approved, I guess, extending the R3 or the multifamily zoning to my property. But that's after the fact. So I got stumped with Fannie Mae and just had to switch and go over to Freddie Mac. So that delay probably cost me like 80 grand or something in refinance cash to pull out. But I shouldn't complain because I pulled out like 220. So these are good problems to have.
Yeah.
I was going to ask you that. So you went from Fannie to Freddie. That was ultimately where you closed with.
Yeah, even though they're both quasi-government agencies, they're both doing the same thing. Freddie doesn't like non-conforming properties, and Freddie doesn't have that same stick up their butt. So it was totally crazy.
Yeah. Well, I'm glad you got it closed, man. That's awesome. And I'm sure DJ's happy to hear you're getting those kind of numbers on your appraisal. So
Yeah,
That's right.
that's good for everybody in Norwood.
all right, man.
Awesome. All right, cool. I'll see you guys in a couple of weeks. Thank you guys for joining us, and thank you, Eric, for your insight in Florida as well.
Appreciate it, guys. Thank you.
Thanks.
See ya.
Yeah.